You ever noticed every time you try to place a position, price normally takes your stop loss and then runs to the direction you were hoping for? And I'm here to tell you that is not random at all. That's exactly how the market is programmed to run. It's hunting for liquidity every single minute of the day. And there's a very simple concept that I came up with to understand exactly when the market's going to shift delivery and trade into the objective I'm looking for. Using this concept alone, I'm up around $20,000 on one of my 50k accounts. That's a 44% return that I've already made. So make sure you have your notepad out to write down exactly what I'm about to teach you, because this is going to change your trading forever. With all that being said, let's get into this video.
This concept is called my 3-candle rotation, and this is going to be the missing piece for most of you in understanding exactly when the market's going to go higher or lower and how the confirmation is going to come about. This is exactly what the confirmation is going to look like. I've created a 3-step checklist. The first thing for the 3-candle rotation to work and understand the market's shifting delivery is understanding when we close above 3 up or down close candles. The second thing is a fair value gap in the opposing direction. And then the next thing is 50% holding up in the price leg to support the idea. So how does this look like within the charts? So closing above 3 down close candles is very important to trust that the market's going to be bullish. And why are we focusing on 3 down close candles for my 3-candle rotation? Well, this is very simple. This is where a opposing fair value gap has the importance in price action. So you can see we've been dropping lower. So as we've been dropping lower, we are going to look for the market to trade into a liquidity pool. So down here, for example, we traded into a sell side liquidity pool. Once we traded into a sell side liquidity pool, the market starts to retrace, trading higher, closing above these 3 down close candles. So this is where the 3-candle rotation comes in. The market is shifting delivery. It's telling us it wants to go higher. From this perspective now, this fair value gap that was made, it fails. This is where the opposing fair value gap in the checklist is important, because if the market was bearish, this gap should be supporting price to trade lower. Now you have 3 confluences. So if you have 3 confluences to your trade idea, this is where the probabilities are starting to fall in your favor. So you have 3 candles pushing lower, trading into a sell side liquidity pool. Now the market pushes higher, closes above those 3 down close candles. So this is the first confluence. Market is shifting delivery. Confirmation is the opposing fair value gap fails. 3-candle rotation starts right now. The next thing is 50% should hold up in price action. So the 50% of these down close candles, you need to get it from the body to the body. You draw out 50%. If the market retraces lower, 50% needs to be sensitive, and this is where you can look for your buying opportunity. And if 50% fails at this 3-candle rotation, then you don't need to take a position. But if we're holding up 50% right here, this is where a good long opportunity is going to take place. And also you have 3 confluences to the trade. Market shifts delivery, closing above a bearish fair value gap, and you have a target for liquidity above the marketplace as well. Now I've laid down the foundation for the 3-candle rotation. Let's move on to a bearish example and then blend this together with my time-based ranges. Now going over the bearish example, you can see this is where we are looking at 3 up close candles. So these 3 up close candles, preferably you want to see them trade into a liquidity pool. So over here, this is where we trade into liquidity. Once we trade into liquidity, you're looking for the market to trade lower, close below these 3 up close candles. Once they do that, this is where we refer back to the checklist. Markets closing below or above 3 down close candles or up close candles. Up close candles we're using for bearish examples and bearish trading setups. Down close candles we're using for bullish examples and bullish trading setups. And then the next thing we look at is a opposing fair value gap. So right here, this is where we have a bullish gap. This bullish gap fails, we trade below it, and then we shift delivery, closing below the 3 up close candles. So completely, this is where we should trust that the market trades lower. Again, we're looking at 50% of these 3 up close candles to hold. Now we can look for the market to trade lower and trade to the downside of an objective we are looking for. And now let's move on to the charts and blend this together with my time-based ranges, giving you a lot more clarity within the market and knowing when to exactly enter. So moving on to the charts, this is my time-based range. My time-based range is going to give you everything you need to know about these markets. So the first range is on UTC -4. This is for the New York session. This is called my blueprint range. It starts at 812 and finishes at 912. So you need to do a bit of independent thinking right now. I'm on the 5-minute time frame. Of course, there is no 812 on here. This is why you move on to the 1-minute time frame and you identify the range. I'm saying this because I saw a comment of someone saying there's no 812 on the 5-minute time frame. Of course there isn't. You need to move on to the lower time frame to identify the range from 812 to 912. So you can see this is the range right here. All you're waiting for is one side of the range to get taken, the liquidity above the marketplace or below the marketplace, and then you can target the opposing end of the range. Now, this is where the 3-candle rotation comes in. This is where you have the confirmation within the market to show you, does it want to trade to the high once we take the low? Does it want to trade to the low once we take the high? Amazing. As you can see, we have 3 down close candles right here. Market prints 2 up close candles. So to trust a buying setup, I'm looking at these 3. If we can close above, then we have a valid buying setup to target the high. As you can see, the market's failing to close above the 3rd down close candle. So it hasn't shifted delivery for me to even look for a buying setup. You can see every time we trade there, we reject away. So I'm staying flat. I'm waiting for the market to actually confirm it wants to go here. I'm not burning myself out in choppy price action. And before you know it, you can see market fails to change delivery. We drop lower, take out the liquidity again. So with the 3-candle rotation, this is where it's saving you from entering positions without the market even showing you its upper hand. And now this is where things get interesting. We take liquidity below this low. We take liquidity below the time-based range low as well. We have 1, 2, 3. So this is where we have 3 down close candles. We close above them. We shift delivery. Ignore this up close candle right here. This is just the one that took liquidity. The focus is the 3 down close candles. Now, as we've shifted delivery, we can trust a buying setup. And this is exactly what our buying setup is going to look like. We're going to buy once we trade into 50% of the down close candles. So going back to the checklist. As you can see, the market trades into the down close candles. We push higher and trade into the liquidity. And this is exactly how the 3-candle rotation is going to come into play every single day using the logic of my time-based range. It's going to be the confirmation. It's going to tell you exactly how the market wants to shift delivery, how you can trust a setup right there, and it's going to stop you from entering the market prematurely, because I know a lot of you would have taken a position right here, got stopped out, and then the market runs to your direction. Now you can wait. You have confirmation, you have logic, you have my time-based range, you have the 3-candle rotation. It's very hard for you not to become profitable. If you put in the work, if you actually study what's in front of you, life will reward you. This is exactly how life works. If you genuinely work hard, it's impossible. Actually, it's a guarantee that you won't fail. You will succeed, you will get better at the thing you are working towards. But if you're half-heartedly looking at what you're doing, you don't really care too much, you're just looking at it as a hobby, you're really not going to move far in this. You have to be passionate, you have to want it, and you have to want to learn more about it. That's exactly how you will succeed. So let's go over one more example breaking this down. Now we are going to go over the example for the London range. So my London blueprint range starts at 112 and finishes at 212. You can see we have just taken out the liquidity above this high. For the 3-candle rotation, what are we looking for? We're looking for the market to show us it wants to trade lower and target this low, because this low immediately becomes the target for this range because we've taken out the high first. So what happens right now? 3 up close candles, market closes below them, takes out liquidity above the dealing range high, so the time-based range high. We have a opposing fair value gap which fails. Now we are looking for the opposing end of the range to get taken. This is exactly where we can sell the market, targeting this side of the range. And there we go. We get tagged into the position, price trades into the opposing end of the range, and we complete my time-based range, 3-candle rotation, and we have another A+ setup. So this is exactly how you should be approaching the market every single day. I can guarantee you this one thing. My model is going to provide you 3 setups at a minimum every single week. Nothing out there can do this. I've taught you something for free that no one even knows about. Like half of these strategies out there, no, 99% of the strategies out there don't even come close to what I've taught for free. And once this falls into the right hands with the right trader, you are going to see how much damage it can be done. Not only from me, but they are going to be able to replicate results better than mine. And that's already happening within my one-on-one academy. One of my students called Zero, he has had a phenomenal month. He had no payout before joining me, and now I have another interview coming out with him and a testimonial of how much money he's actually made, and you will be surprised. And if you are interested in learning more about my academy, and that's exactly where I go into detail about understanding these markets in a deeper level, this is just the tip of the iceberg. This is just free source I've given you to understanding how to get payouts and how to make money from the markets. Then I dive deeper into exactly understanding why these ranges work, exactly what should cause an expansion, exactly how you should be making money from prop firms. That's everything that goes on within my Blueprint Academy. And one thing you should know is that academy is all NDA based. So whatever I teach inside of there, nothing goes out. So if you are interested in finding a group like that and finding like-minded people, then you can apply from the link below. But remember, it's an interview process with me. I want to see if you're the right fit for the program, because if you're already focusing and learning about what I'm teaching right now, the program's obviously going to be a perfect fit because you are someone that actually wants to put in the work. So I hope you did find this video insightful. If you are wanting to learn more about my Blueprint Academy, then you can go into the first link in the description and you can apply there and go over everything I spoke about just before. And remember, I'm rooting for you and I hope you do find success in this business. As always, enjoy the rest of your day.